it's impossible to pick, what to talk about because so much happens in a 3-month period in the world of Bitcoin and just the general world of macroeconomics at this point, geopolitics. So, I mean, the biggest story I think is the Russian invasion of Ukraine, and there was a lot of competition for the biggest story of the quarter, but I think this one has to trump them all. I've seen a lot of economic fallouts that's ensued since then. The weaponization of the financial system, the payment system against Russia, and it's caused a lot of havoc in the oil markets, energy markets, and we're just really beginning to see the fallout of this, I think. So, Preston, let's start with you. Why don't you give me your thoughts on how this financial system has been weaponized? What you think of, the seizure of FX reserves, the precedent that sets, cutting Russia off from SWIFT, all of that.
I think everything you just said is stuff that I think most market participants, whether they even understand the implications of what you just said, but the ones that are paying attention to what's going on, it's like it's so obvious in plain sight that what's happening is not sustainable. And I think for people that aren't intimately familiar with financial markets, they're just feeling it. They're saying there is something just drastically wrong. I don't know what it is, but there is something that's going to break like soon. And so we can talk about all these fancy things and we can, get into the nuances of stuff that's going to sound real fancy with the terminology. But I think in general, everything that's happening is not sustainable. When you look at the essence of what it is that's unsustainable, the whole world has constructed this financial model that there was no inflation and that supply chains were just humming along at near perfection, just in time logistics, where you got Six Sigma set up on delivery of everything, right? The whole world was that prior to COVID. Now you have that entire model it wasn't just dropped and broke, it's shattered. And I think the Ukraine Russia piece that just kind of played out here in the last quarter was just, and I don't know if this is correct phraseology, but like that was just the icing on top of the disaster that was already there. We had already had inflation that went from what many would consider nothing, sub 2% levels that had persisted for a decade. And many in the market prior to COVID would have suggested that that's the new normal, and that's how things are going to continue to be. And that if they do more QE, it's only going to compress even further to nothing or maybe even negative. I don't know. But everyone had that model that's what inflation was, and that's what it was going to persist to be. And now you have the exact opposite. In fact, the last year before Russia even happened, inflation was 5%, 5.5% plus. Now that happened, we're seeing 8%, and I think many have the expectation that it's going over 10. And back to what I was saying earlier is when you do financial modeling, it all starts with this keystone of the calculation, which is what is inflation, because that at a minimum has to be what I have to outpace when I'm buying bonds or when I'm buying stock or I'm buying anything. I have to get a return that outpaces at least that. And so when we look at this Russia-Ukraine situation and how dependent Europe is, how dependent the entire planet is on that energy, on the raw materials coming out of the Ukraine, from farming to fertilizer to everything. I just don't think that it has even begun to price in what that impact is and how devastating it's going to be. And I don't want to sound like doom and gloom here. I just want people to really kind of understand the magnitude of how profound I think the inflation and the disruption in supply chains is probably going to be to all these economic models that are still just trying to figure things out. And I think that's just somewhat indescribable, to be quite honest with you. The shock to the system is somewhat indescribable. So I'll stop there.
Yeah, Andy, I mean, do you agree that we're just really seeing the beginning of the shock to the system? That these events, as they're unfolding, I mean, it's only been a little over a month since the invasion occurred, so it's still very early in the timeline of the fallout of all of these actions. So, what do you think about the weaponization of the financial system and the coming fallout in terms of supply chain for energy, for goods and services, et cetera?
Yeah, well, I think Preston laid out the base facts there. Look, I'm 40. I've been active in financial markets for 2 decades. I've never seen a setup like this, a situation like this. There's a whole generation of investors, financial advisors, institutional investors, plebs, retail, everyone. Almost nobody alive today had money the last time we experienced significant inflation, right, in the 1970s. I mean, yes, a few senior citizens did have investment portfolios, but most people didn't. And so we're facing a time when, just number go up in risk, and that's mainly stocks, especially U.S. stocks, has been the name of the game. I think the game has changed. This decade, in my opinion, is going to be tough sledding for investors. And so that's just the investment perspective. By the way, all the facts and circumstances that Preston laid out, by the way, were 4% off peak levels for the S&P, right? The S&P is only down 4% from its recent peak, despite the fact that axes of power and global order are realigning, right? To use the Ray Dalio framework, right? The changing world order is happening, and it's happening now, and it's going to play out over years. But this is something we're going to live through this decade, in my opinion. So yeah, the implications are enormous. Obviously, there are investment implications. There are personal decision implications with respect to how you want to live, where you want to live, how you're going to secure your family's future. And these are big issues and big questions that anyone living through the 2020s is gonna have to answer. So I sort of scratch my head at financial markets right now, where, as I said, we're barely off peak in the S&P, and yet the yield curve has inverted, which is screaming recession at us. It's not a perfect predictor, but it's a pretty good predictor. And the supply chain disruption that Preston described is going to have far-reaching effects. And I think it's nowhere near over. I think we got a lot more of this to play out in the coming months and years.
Hey, Brady.
Yeah.
When he was saying that, and he was saying that the S&P is only off 4%, I was just like, I immediately went to my chart because I was like, there's no way. There's no way this thing's only off 4%.
Fact check.
It was like the Will Ferrell meme where he's like, I don't believe you.
I don't believe you.
And I looked it up, and sure enough, it's at 4.5%. And I was just like, holy moly, how is that even possible?